Hey everyone, Michael here. In today's video, I'm going to help you guys learn how to use the moving average indicator like a professional investor. Most of you guys only utilize about 10% of the moving average, so I want to get you guys to that next level where you guys can use this in a professional aspect. So first things first, I want you guys to go over here to indicators, metrics, and strategies and just type in MA. Once you guys go down here under technicals, you're going to see moving average. For now, I want you guys to put this up 3 times. So click on it 3 separate times. 1, 2, 3. And then I want you guys just to hide the bottom 2. We're going to work on those a little bit later when we talk about the actual strategy behind the moving averages. But first of all, I want you guys to understand all of the things you guys can do with this and how you guys can customize it. So when you guys hover over the indicator right here, you guys have a few options. You guys see this eyeball right here? This is showing you that you can hide this indicator. Just like so, I can hide it very, very easy. Sometimes you guys don't want to see it, sometimes you do. If your screen looks cluttered, you guys can easily just hide the indicator whenever you guys want to. Next, you're going to see the settings tab. When you guys click on this, there are a whole bunch of different aspects you guys can change. You got the MA length, source, offset, you got your methods and length for the smoothing line, which is not on in default settings. And then you got your multiple time frame here. You can choose what time frames it goes on, and you can wait for timeline crosses. And then you got your style, so you can change the colors, the thickness, you can activate the smoothing line, so you guys can see now there's 2 lines on this chart. And you guys can also change the precision and the labels based on price scale and values and status line. After that, you can go over here to source code. Most of you guys will never use this, but it'll pull up right here all the code that goes along with this. If some of you guys like to write your own strategies or codes, you guys can actually copy this code and enter it in your own coding system and basically make a new strategy that you could implement on TradingView for yourself or for a team of yours or for a class of yours. And then to make it go down, just hit this little minus button and boom, it disappears. Afterwards, you have this remove button right here. If I were to click on it, it would disappear. The indicator is no longer there. If you accidentally click on it, just hit Control Z and it'll pop right back up for you. Afterwards, you have these 3 dots. It says more. There are a lot of things over here and you guys should understand how to use each one of these. Most of you guys will never use them, but most of you guys will eventually have to use them if you guys want to get to that next level, okay? Now, here are a few things that you guys might want to know. You can have add alert. So if you click on this one, you can have an alert set up. So if the price action crosses above or below or taps on it, right, you guys will get an alert on your phone or on your computer. And you can see all this right here. These are all different levels of alerts that you guys can do. Crossing up, crossing down, less than, greater than, entering channel, exiting channel, inside channel. These are all things you can do associated with this moving average. And you can do trigger. This can be for an alert for every bar that's over it on whatever time frame you guys want to. Open once per bar close, once per minute. You could have a lot of stuff here. You can set up your alert name and what's going on. And then you can hit create right there and you guys can set up an alert. And of course have notifications. So if you guys have the app, you guys can decide to have the notifications in the app, a pop-up, an email, a webhook URL, a play sound, or send it to your phone for text messages. Especially if you guys are already in a trade and you guys are just out and about in your day, a long swing trade. If something hits, you're going to be better off knowing what's going on in the market without having to check. You can say, hey, automatically I got an alert, I'm okay. Afterwards, you can see add indicator / strategy on MA. This is if you guys want to add another strategy onto a moving average. Normally, you're not going to be using this for moving averages. You might use this for something more like a MACD or a stochastic RSI or an RSI, something else. This one you're probably not going to use all too much with the moving average. Afterwards, you see add this indicator to entire layout. If you guys like to have multiple charts on your layout, you can click this right here and it'll add the same indicator onto all of your charts exactly as is. So if you guys want to click on this, make sure that you have it set up all the way before you hit this button. That way it copies all of your settings. That way you guys don't have to redo the settings for all of them. You want to click on this after you've actually set everything up in that settings tab that we just talked about a few minutes ago. Afterwards, you have visual order. This is pretty simple, especially if you guys are in graphic design. Basically, do you want it all the way at the front? Do you want it all the way in the back? How do you guys want to see this? You can have it in front of the candle bars, behind the candle bars. Personally, to me, I like it to be at the very front, so I'll say put at front, but normally it's already there in the first place. But sometimes you guys want to see the lower moving averages in front of the higher moving averages, like the 20 in front of the 50 in front of the 200. So when you see that crossover, you can clearly see which one is crossing over. sometimes you guys can set it up like that. That's really if you're nitpicky, but sometimes people love that aesthetic of looking very nice and crisp on their charts. Afterwards, we have visibility on intervals. This is something that I truly love, but I don't really use too much. I do think you guys will get a kick out of this. So basically it says visibility on intervals, current intervals and above, current interval and below, current interval only in all intervals. So if I say current interval and above, basically this moving average is only going to show up on the daily chart, the weekly chart, and the monthly chart, and any chart with a time frame above a day. But if I go over here to the 4-hour chart, it's not going to show up. In fact, you'll see it right there. It says it's hidden, show interval settings. And right there, right, you can see it's only set up for days, weeks, months, and ranges. And you guys can see right here in visibility. This is an okay way of doing it, but it's not as precise as saying that setting it up by the intervals on the main page, okay? So if I wanted to change this back, I can just go back to saying all intervals and it'll pop right back up here. Nice and easy. But I do think some of you guys maybe only want to see certain moving averages on different charts. Maybe when you guys are using a 15-minute chart, that's all you want to see these moving averages on, maybe 15-minute chart and above. When you get on the 5-minute chart, you guys no longer want to see those moving averages because then the signals aren't really working in your favor at that point because there's just too many false signals. You guys can have it set up so you guys just aren't seeing that, and you guys can have it set up so certain moving averages are only showing up in the lower time frames as well. Afterwards, you can see move to, new pane above, new pane below. This one is basically, you know how you could add different moving averages here like MACDs and stochastic RSIs? You can move this to a different pane. So you can move this moving average down below onto a MACD. So you guys can do that as well. You guys are never going to be doing that. So there's no reason to be doing that at this point using this Ethereum daily chart. Let me go back over here to the daily chart as well. Afterwards, we have PenToScale. Now you guys see on the right hand side of your chart that screen, there's a chart right here for Ethereum. It's like the low point is 1330 up towards like 1966. It looks like the current price action. So you can make it so you can see the numbers of the moving average on the left hand side or the right hand side or wherever you guys want to see it. Typically you don't want to touch this because it just makes everything look a little bit nastier. What you can do right now is go pen to new left scale, and you're going to see the scale pop up right here showing where that moving average is. I don't really use this at all. I don't recommend you guys use this at all. There are times where it's valid to use, like with volume profiles and things like that, but for now I would say you probably just want to go back to PenToScale to A and just leave it as is. You don't really want to touch it all too much, okay? Afterwards, you want to talk about this script. This is where you can get a detailed explanation of what this indicator is from TradingView's perspective. So if you click on this, it's going to pop up right here, and I am zoomed in about 250% so you guys can see everything on my screen right now. And you can see this is moving averages. They're going to have a short video on it. It's not going to be as detailed as mine, which is why I make these tutorials, because people usually watch this and they still have questions, which is where my channel comes in. But if you guys want a very, very basic understanding of what these moving averages do, this is usually a good place to start. It's only, people usually still have questions, unfortunately. Now, it'll give you the definition. It'll try to give you a couple of examples with a video, load new bars, different types of moving averages here. It'll go over the calculations. That way you can kind of follow the math if you guys like to do the math. I don't, but you can see double exponential moving averages, which are not what we're talking about today, the DMAs and the TMAs and stuff like that. Walgreens, they can kind of show you what's going on there. And so there's a whole bunch of stuff they go on about. This is talking about all different types of moving averages, though, not just the moving averages we're talking about today. But lots of good stuff you guys may like. And these haven't been updated in a while, which is why you may see style looks a lot different. They haven't updated these in a long time. Look at this style right here. I'll go over here to this style. See how there's more stuff on it now? They've changed a lot, but unfortunately they haven't really updated their website, which is again where my channel comes in. Now, coming back over here, you're going to see source code. We've already talked about that. That's if you guys want to add the code on there. It's the same button as right there. You guys don't have to watch this again. Now, you can see copy. If you guys want to copy and paste this indicator, very easy. Just hit copy button, hit Control V, and you can paste another indicator on this chart, on another chart, another layout, whatever you guys want to do. You can just basically copy and paste. Afterwards, you see the hide button. Very self-explanatory, the same as this button up here. You guys don't have to worry about that. Then over here you have object tree. This one I never really use, but basically if you have different moving averages on here, you can kind of get an idea of what moving averages you guys are looking at. And so you can, hide them over here, unhide them, you can check them out. You can go over here and do the chart settings if you guys want to. I don't bother with it. I don't use it at all. But if you ever wanted to come over here without using that button, you would scroll all the way to the bottom on the right-hand side where you see like 3 boxes overlapping each other. And it says object tree multi-select drawings. To get out of it, just click on it right there. Afterwards, you see data window. This is something I think you guys will probably use as time goes on. But for new investors, you guys may just not have a use for it just yet. But when you click on this, you're going to see a lot of information about whatever you're trading. So the majority of this is actually just about Ethereum and what's going on. You can see the open, the high, the low, the close from yesterday, or the close currently if it was the close now, the change, the volume, and you can see the MAs right here. Well, what I like about this is you can see the current moving average. So you can see right now the current moving average is $1,901.32. So if I were to have a support buying opportunity here for this moving average, which I'm not because it's not a moving average I would use normally, but still, you could actually have that precise number to enter into your limit buy order. So if it falls to that level, you guys are going to be just fine, okay? So this is something you guys may want to use in the future. If you guys want to find it easier without actually going over here and finding it through this longer way, you guys could just click the third from the top button on the right hand side. It's below watch list details and news, and below the alerts, third one from the top, and it's just called data window. If you hit this hide button right here, you'll see that it just hides the entire chart, and you can also hide the moving average if you guys want to, and you guys can hide whatever you guys want, of course. Now let's get out of that one. And here we're going to go over here to settings. So we're going to click on the settings icon, and this is where we change everything up. First, we're going to start off with inputs, and here's the settings I would recommend you guys do, and we'll do this with all the moving averages before we start going on to the formal strategy of how you guys can make some consistent profits by using the moving average. So the simple and most trusted one I would say at this point in time is going to be your simple 20, 50, 200. So we're going to have the length set to 20, the source set to close, offset 0, method SMA, we can leave it there, length 5, time frame chart, fine there. And we're going to go over to style, make this green, make it extra thick, of course, and then hit OK. Now we're going to go over here very fast, make these seen. We're going to make this really fast, so just catch up when you guys can. 50, baby blue, quarter thickness, or the best thickness you guys can have. Okay, yellow, of course, large thickness, and input here 200. Now, we have to talk about everything you can do in here, because now that we have this set up, you guys have a lot of options. So when we're dealing with length when it comes to the normal moving averages, we're basically telling it how many candle bars do we want to use to actually use in the formula to create the moving average line. So when we're using the normal moving average, this is known as an SMA, a simple moving average, where all of the candles have equal weight. So we're not tilting the scales or unbalancing the scales. Everything is weighted equally. And so when you guys are using the 20, it's taking the average of the 20. When you're worrying about EMAs and double EMAs and triple EMAs, it's putting more weight on the most recent price action to try to reduce some of that lag. There is a lot of lag when it comes into simple moving averages, which is why some people like to do exponential moving averages and double exponential moving averages and triple exponential moving averages. So you guys will determine what numbers you guys want, but traditionally 20, 50, 200 are solid ones. You guys can also go with 20, 50, 100, and there are plenty of other ones, but you guys can look at those up on your own time. Now, you guys have the source. There are a bunch of sources here, and we're going to kind of go over all of them, okay? So when the moving average is calculated on TradingView, it's going to be using certain numbers. Those numbers are determined by the source. So in this scenario, we're using close. So the numbers, like the 20 numbers in the 20 moving average chart, those are the 20 closing prices. Those are the numbers chosen. You could also choose the open numbers, the high numbers, or the low numbers. So you can go over here very fast and that's one random point in time. We can check this out. So if we were using the closing price, which we normally do, the closing price is somewhere around, let's just right here, $1,426.44. It's up right here at the very top of the chart. That's the number it was using as part of the calculation among 20 other bars. If I were to use the low, it would be actually using 1,368.39, which is well below the 1,426 we just saw, okay? So that will actually change the line and how it's used and how you guys perceive that data. If we go back over here to settings, you can also do high-low. So it'll take the average of the high and the low to try to average it out a little bit more, and then that average will also be used amongst all the other candles of the moving average. HLC is high, low, close 3, and the 3 is just telling you that there's 3 different things being used. Same for the HL2, high, low, there's 2 things. HLC, high, low, close. OHLC is open, high, low, close, 4, because there's 4 different things going on. HLCC, high, low, close, and I always forget this one right here. High, low, close, close. It's a weird one, but it still has a multiple close there. MA, this is just the regular moving average. Smoothing line, if you guys want to have the smoothing line set up here, you can also have that be part of the calculations. You guys will most likely not use this. MA, you guys will not be using this one at all, or MA smoothing line, you guys will not be using any of these things here. Only the high, low, close, close, open, high, low, close, high, low, close, high, low, or the close, low, open, high. All right. And if I were to zoom out just a little bit here, and let's go over maybe to the weekly chart, zoom out a little bit more. And for this one, for now, we're fine. You guys can see all of these lines and what's been going on. If I go over here, I move this over to the right-hand side, look at all these lines, and let me change for the 20, which is the green line here. And instead of close, let's go to high. And you can see how much higher it is because it's using higher values here. And when it does that, you can see instead of using the close, we didn't get this false signal that was signaling a bearish move. We didn't actually get that false signal. So there was a little bit less lag, and that lag helped us from getting a false signal here. So that's one of the ways you guys can use it. If you go over here to high, low, close, close, you can see it adjusted just a little bit, but not too much because of course it was taking a lot of the averages, and normally the close is usually a pretty good average of where things have been going. You can go over here to open, high, low, close. You can see it moved a little bit, but not a lot. High, low, a little bit more. High, low, close, a little bit, but mostly on the margins. It's usually when you get to the open, the high, or the low, that's where things get a little bit more low. See how it's coming back down a lot more. That crossover over here gave you a heads up that something bad was going to happen, but of course it didn't give you the best opportunity to watch out for that big move that popped up ahead of time. All right. So traditionally, you guys will keep it closed, but if you guys have a strategy that you guys like, or you guys want to practice making your own strategies, I would highly recommend testing out some different sources for yourself. They can do a lot of good here. Now, you also have offset here. If you guys want to tweak this a little bit, I think it's better that I go back over to the daily chart and I just show you guys this. Look at the moving averages. Let's go over here back to settings. Let's move this kind of behind me and watch these very fast. Offset. It moves it into the future just 1, okay? Now 2, it's moving it into the future so you can try to reduce some lag there. Now, I don't use this because typically it doesn't work as well as I would like to, at least when it comes to cryptocurrencies and stocks, but I have heard this to be very useful when it comes to Forex pairs, or in gold and stuff like that, gold, silver. So if you guys wanted to try it out, I think it'd be very good on that side, or if you guys find a particular stock that it works very well on, I would encourage you guys to try to use it as well. You could also go negative, but basically if you want to have an idea of maybe something's going to happen in the future, you can have everything be offset 4. So I have offset 4 for the 20-day moving average, offset 4 for the 50, and you can see I can actually see a death cross happening a little bit earlier, so I can get ready for Bitcoin, or in this case Ethereum, to come down a little bit more in the future. Do you want to use it like this? You can, but usually the more you kind of look into the future, the less reliable it is because these are already lagging indicators. You're just trying to find a way to take some of that lag off, and that's what the offsets are used for. So for now, I'm going to take the lags all the way back to 0, right? And afterwards, we're going to go back over to settings. And after that, you guys can see smoothing. Now, if you guys go over here and you change anything about the smoothing line, like you change the length to 50, nothing is going to happen because this 20 is not the smoothing line. In order to turn on the smoothing line, you have to go over here to style, and you actually have to click on this checkbox, and then you actually have the smoothing line. So in this scenario, it's orange. I usually keep it at orange or whatever line you guys want to, and you can have this be set to a simple moving average, an EMA, an SSMA, or SMMA, excuse me, a weighted moving average, or a volume weighted moving average right here, whatever you guys prefer. Normally people will keep it as a simple moving average because we're already dealing with simple moving averages. But if you guys have a pair of simple moving averages versus exponential moving averages, by all means use the strategy that most works for you in the type of currencies and securities that you guys like to invest. Now, some of you guys don't pay for premium TradingView like I do, so some of you guys don't have the ability to actually use all this stuff. So if you guys want to use one indicator and save yourself some time from using up the maximum amount of indicators that you guys are allocated, you guys can always use the simple moving average right here of 50, and basically it'll help you out just a little bit more. It is a little bit different from just the normal 50. So if I turn on the 50 right here, it's a little bit different. But basically what you're able to do here is, see if I can do this right here. You can adjust this a little bit more if you guys want to, but typically what I end up doing is just keeping at the simplest SMA. You're gonna have a little bit more lag, but in order to adjust for that, usually because they do have different formulas for the smoothing line versus the moving average line, you could try to figure out where these things kind of intersect a little bit more. You can see a 40 is okay, maybe a 35 or so, but usually when it comes to day trading, they're just fine. For me, typically, I will just keep it at 50 though, on this type of strategy, because you can see back in time a little bit more. That 50 crossover right here with the 20, still made the same mistake right there, nothing crazy about it. But the crossover right here worked out in our favor. That's the type of stuff I'm looking for. But again, make sure it's working out with your strategy. The majority of you guys, I don't think actually use the smoothing line, but I would encourage you guys to start using it. If you guys don't like to see it with lines, you guys can make it with circles or any other shape just to make sure you guys understand that it is a smoothing line and not just a moving average line. So crosses, whatever, you guys can adjust it as you guys want. Let's take that off for now. And below you guys can see time frame. So if you guys are looking at the daily chart, but you guys want to see the moving average on the moving average for another time frame, you guys can easily just say, hey, I want to see the 20 moving average on the 4-hour chart, but I want to see it what it looks like on the daily chart. So this is the 20 moving average on the 4-hour chart, but we're looking at it on the daily chart. Now, I never really like to do this too much, except for to maybe make a point or so. But, you know, normally I would say you guys really don't have to do anything like this. I will always keep it on chart. That way it's all set up the way I like it. And then you can click on this one button that says wait for time frame closes. This is so it won't update until the time frame actually closes. Otherwise, it may be moving with the price action. I like it to stay stationary, so I will actually keep this checked. But test it out and don't check it and see if you guys like it that way. Going over here to style, you guys can change the thickness and the color of your lines, also the opacity of them. You can see right there the line is going dark green into nothingness, so to speak. You guys can determine if you guys want to see a line, a price line. So basically, you can see where the actual moving average is on the right-hand side of your chart. I don't like to have it there because it looks ugly, of course. But you can have a line with breaks. You can do a whole bunch of stuff here. You can have a step line, histogram, crosses, area line. You know, I don't do any of this stuff, but I just keep it as a line. But most of you guys will most likely just have this be a 3rd or 4th thickness. Right now it looks very thick because I am zoomed in about 250%. If I'm zoomed in 100% normally, it doesn't look all too thick. It's only because I want you guys to see everything that I'm doing at this point in time. There we go. Now it looks a little too thick, but we can bear with that. Now afterwards, you guys can see the smoothing line. We already talked about that one. You can change it as much as you want to the same colors and change the boxes, everything about it. But for now, we're just keeping it off. You guys can set up the precision. So this is for the defaults. I don't really mess with this all too much, but you can go to 3 or so, and it basically just changes up the outputs a little bit. You're not going to really see too much of a difference on a lot of this stuff. I should probably put the smoothing line back on here. Yeah, but basically you can see it's actually not changing anything right now at all, actually. So this doesn't have much to do with this one. You can also do labels on price scale. I don't think for this one it's going to really do anything here. No, it's not going to have any effect on this particular one, but in some indicators it can. It looks like this is just kind of a base thing they put on here, but you can see nothing is changing when we do this. That's kind of nice to know, so you guys don't have to worry about it. Afterwards, you got visibility. If you guys, again, don't want to see it on certain time frames, or you guys don't want to see it on certain ranges, you guys can have it set up like this. I would say if you want to change it, usually just do it on the visibility of intervals. So you can say, hey, I want to see it on all intervals above this, all intervals below this. It's a lot easier than trying to do exactly check every box. It's just a lot easier, okay? Now we're going to get on to the strategy side of this. And what I'm going to do actually is get rid of the smoothing line very fast. And you guys will know that moving averages have a few different uses. The first one is usually going to be support and resistance. And if we go over here, you guys can see sometimes, not all the time, sometimes we have some good support and good resistance here. You can see with Ethereum, the 200 daily moving average was a solid resistance level or support level where you could have bought and played a huge bounce. This was a scary time to be buying historically because there was a banking crisis going on, and in fact, it's still going on to this day. But if you guys had conviction and you guys had a plan, you guys could have bought and maybe used a stop loss or something similar to buy in at that major level of support. Going back over here, you guys can see a support level right there. You guys could see a support level all along this 20-day moving average right there before it broke and we bounced off the 50. And when eventually we did break down below the 50, things got really, really bad. And you can see the support on the 50 here, support on the 20, all the way up before we broke down, and we kind of played around a little bit here before eventually breaking up. Now, there's been a lot of crazy stuff going on, so technical analysis has been kind of topsy-turvy here. But a lot of times what I do want you guys to take a peek at is you are going to often see the price action between a 50 and a 20-day moving average. It's going to squeeze and it's going to have a big move regardless. If you can guess which way it's going to be going right by having a MACD or another crossover or something similar, often you guys can get a really good positive move that's going to give you a really good profit. In this scenario, it managed to break out, and if you guys traded that breakout, you guys would be looking very, very good, especially if you guys like to add something like a MACD. So in this circumstance for the squeeze strategy, which not many people talk about, you guys would just add a MACD or some type of indicator that will tell you guys momentum. And so for the MACD here, let's go over to the 4-hour chart. And maybe for this circumstance, maybe I might just say, hey, I want to see what this looked like on the daily chart. Daily chart. Daily chart. And then you can see how it was squeezing in between those and see the support level right there. See how it didn't work out all the time for that support level though, all right? Now, you see that MACD? The crossover happened right there. So let me add a vertical line right here where the crossover was attained. So you could wait for the pullback after we manage to break back above. So that'd be somewhere around here. We're never going to get the bottom, but we can often try to get close enough. And then from there, you could have basically added on a Fibonacci extension level right there. And then I would have done one more thing here. We need to have fib levels turned on here. And basically played this up as much as you wanted to. You can see that hard level of resistance. We broke out above the squeeze. We managed to break out above the extra Fibonacci level. And then that kind of hit this, we hit this level of resistance kind of right around here, that resistance box, so to speak. But that's how you guys would be doing the squeeze method, just making sure that you guys have a good level of target price and you guys understand the crossover that's happening beforehand. You want to see other things happening to kind of fit that squeeze mentality. Hey, we're having a crossover on the 4-hour chart. That's a very bullish sign. Let's see how far we're going to go, especially because Bitcoin's having something similar, etc. Now, we can save the MACD for a little bit later. Let's go back over here to the daily chart, and I want to make sure everything else is set back to chart. If you guys change this, you guys want to make sure you always go back and change it to make sure you're not going to be messing up, because sometimes we forget, and when we forget, things can get a little bit iffy. Now, the other way you guys can be looking at this beyond support and resistance and some of these squeeze methods, because you guys can see another squeeze method right here. Squeezed, big move down right there. A small squeeze in between right here, big move right there. They happen more than you guys would think, especially with Ethereum. But it happens a lot with stocks and stocks as well. So the other way here is going to be golden crosses and death crosses. And for these, you guys really want to make sure that it has a history of working out. Sometimes in a bull market, it has much more of a history. than in a bear market. You guys want to make sure you guys just understand that. For instance, here, this drop happened so fast on our chart that this death cross didn't do anything, because by the time the cross was certified, or it had closed, it was already at the bottom and nothing happened afterwards. If you tried to buy off of that, nothing happened. You lost money, in fact, right? If you tried to short sell this. Going back over here, we haven't had any more crossovers. We had a golden cross here, then a death cross, and that really didn't do much to us at all as well. So for Ethereum, it hasn't really been the biggest help. We had a golden cross right there. In fact, the price action went down. A MACD is more likely going to be able to help you here on an Ethereum chart on the daily than your typical SMA. So what you might do here is, you see the lag is just too lagging, which means you might want to move over to an exponential moving average that will put more weight on the most recent candles, or maybe even a double exponential average for something like Ethereum. And as soon as you see that, you can just simply adjust your strategy. You don't have to stick with it. But if we were to go over here with something like maybe the 15-minute chart, you can see right here, we've had a death cross right there. And so far, we're coming down slowly. We had the golden cross right here, and so far we have been moving up. So on the 15-minute chart, it's actually not working out so bad. Over here, death cross, we did go down a little bit. And of course, some of these smaller time frames, you're only going to be in the trade for like a few hours or so. Death cross right there, it worked out okay in our favor. A golden cross there, it didn't work out in our favor, but you can see we were kind of already oversold at that point. So if we pop open this MACD, you could see we were already in a bearish divergence from having higher highs here but lower highs here. You don't want to be buying into a bearish divergence. So by actually using this with indicators, you guys can have a much stronger opportunity to make more consistent profits by making sure when you guys have these false signals, you guys can say, whoa, the MACD says I should not be buying. So even though I see that crossover there, that's not what I'm going to be looking for. And then the last major way you guys can make some good money off of this is to actually look at historical context and see what happens when certain crossovers occur. My favorite happens to be not on Ethereum, but on Bitcoin. So if I go over here to this Bitcoin chart, excuse me, and I go over to the daily chart and I zoom out, historically, every time Bitcoin makes an all-time high and we have a death cross between the 20 and the 50-day moving averages, to me that symbolizes that the bull market, excuse me, is almost over. So we hit an all-time high over here in 2021, that death cross right there, and what happened? We came crashing back down. All right. Now we had COVID stimulus, so we had another rally here, but guess what? Another all-time high. We had the death cross right there, and of course, the market was over. If you guys like that, you guys can remember that for every bull market. We didn't hit all-time highs here, but it did signal that the rally was almost over. Go back over here to 2017, where the majority of you guys started hearing about cryptocurrencies. Death cross happened after all-time highs, and guess what? The rally was over. And you can even use this on the weekly charts as well. A death cross on the weekly charts, bad times are ahead. Death cross right here, bad times are ahead. Bad times are ahead. Bad times are ahead here technically, but we've never actually had the crossover between the 200 and the 50, never in Bitcoin's history. So we don't exactly know what's going to happen there, but every time we have the crossover between the 20 and the 50, ever since, I guess, 2014, because, we weren't doing technical analysis on Bitcoin when it was at $7. But over time, this has proven to be true about 9 out of 10 times or something similar to that. So if you ever see that death cross occur, whenever it does, you guys know that, hey, probably a very bad move is coming. I hope you guys enjoyed this tutorial a lot, and if you guys have any questions or you guys want me to do another tutorial like this, please let me know in the comments below, and thank you guys so much for watching today. Appreciate it.